Haven't even deviated from the long-term trend. So it's a very comfortable place to be. All your gains come in a very short period of time, and then the rest of it, you're losing money. It's very painful if you have a short-term mindset.
Based on this average, when and how much the top would be?
If the average of prior cycles happens, this puts us at...
Guys, welcome back to another show. Today I'm here with Sina. As always, every 4 weeks an update. Make sure to slap the like button and subscribe to the channel. Sina, how are you doing today?
Hi, how are you? Excited for another chat. Happy all-time highs, and we are above the clouds and flying and enjoying our time. So let's discuss.
Exactly, super juicy episode, because last time you said once we break 115, the party begins. It's time to celebrate yet?
Yeah, it looks like we have this pattern of first price explodes because of a significant fundamental reason, like the ETFs or like Trump administration's pro-Bitcoin policies. Then after that explosion, we spend quite some painful time, range-bound action, and maybe even slow bleed. The range values that we discussed last time, between 100 to 115 region, it was the range bound behavior, and breaking that would mean that finally the demand has been so strong that all the sell pressure is now fully absorbed. Now that doesn't mean we are straight up gonna go to 150, but this shows that there is this the model I have in my mind is like demand comes every day. Demand is like a little bit of an attack on a wall every single day. So you weaken that wall, and at some point it breaks and you go to the next level. So now we're ready to go to the next level. The old barrier is broken.
And I guess it's healthy, right, to retest those lower levels. If it would have gone straight up to 140, 150, I think it would have been maybe less healthy. And usually when that happens, is signaling the end of the run, if it makes sense. I like that we are going up and then retesting going up. It's creating a base for us to go higher, right?
Exactly. Like we were at 20,000 before any significant ETF news comes up. And then we shot up to 70 or something to new all-time highs, something that had never happened before. They're having, right? So after that, of course, we needed all that bleed, and range bound was the healthy correction to get us ready for the next level. Then we got another one, another correction, and then I wouldn't be surprised if this continues. Like you get a couple days of price running, and then you get several months of nothing, and it's going to be very difficult for people to comprehend, because all your gains come in a very short period of time, and then the rest of it, you're losing money. It's very painful if you have a short-term mindset, and if you have this mindset of, okay, I'm going to be timing the market and getting back in right at the right time. Most people doing that will find themselves in a situation where price begins running. They chase it, and then the next bleed period starts, and they keep losing money even though price goes up. Very difficult, but if you're ready, if you know what's coming, and if you kind of make yourself aware of the pattern before it happens, you can tolerate it. It wasn't really easy for people to tolerate 7 months of losing money after the ETF jump, right? So we went slowly down. Up to some point, people can take it, right? But if it continues, it will break people's hope, right? So people begin to kind of lose hope and lose their optimism, and you could see that in the data. You could see that in the positioning and futures in trading activity, and it pushes you to the limit until you capitulate, and that's exactly the worst time, and the price recovers right from that. Again, the good thing about it is you can see that in the data. So you could see extreme bearish sentiment, which typically precedes massive runs. In the recent drop to 100,000, we were observing the seller exhaustion, and we actually wrote a report a couple of weeks back. The whole title is seller exhaustion. That turned out to be the bottom, right? So when you actually feel the worst about Bitcoin price action, that's when good things will happen.
When do you think retail is going to FOMO into this?
It's basically human nature. I don't like the markets have evolved around human biases and our weaknesses, right? Sharks are there to take advantage of our weaknesses, which is we overestimate our ability to predict short term and underestimate the long term potential. So in the short run, everyone thinks, I'm going to immediately get rich. In the long run, people don't have the patience to see what can come, right? So they engage in destructive behavior, and especially this sort of Bitcoin price action is the worst for that kind of person, where gains happen in a short time, losses happen over time. And we've seen this over and over, and in every market and in every country and in every region and every asset, and so much that it's kind of like our nature. So we have to be doing this apparently. And a minority of people would be able to overcome that human nature to chase prices and join the hype, and instead take a more long-term view and avoid emotions to get in the way.
Speaking of long-term view and data, you have some charts for us today, right?
We could take a quick look at our long-term valuation models, and the reason for that is Bitcoin has grown so much in the last couple of days, and it's important to reassess where we are in terms of, are we overheated? Is a big correction is coming, or does this rally have more room to run? This is from our Bitcoin intelligence platform, and when you join here, you could look at our valuation models, and I'm going to begin by a simple power law regression. This is a trend that captures the long-term 15, 16-year trend that Bitcoin has been following through a very simple line. You can see that the price has been, in the bear market, has been deviating quite a bit below it, but over time, especially in this cycle, it's now just flirting with that line. It doesn't really go much below it. It doesn't really go much above it, and it's flirting with it. It's only very recent price action that is starting to deviate a little bit. But as long as we're close to this, we're basically at the average long-term trend. We really haven't entered any huge bubble zone, right? And this is hard to see here. So that's why we have developed VPLI, volatility adjusted power law index, that measures that deviation and scales it on a cool to hot continuum. So right now we're still in the middle at 57 out of 100. So this metric goes from 0 to 100. And if it goes as high as 75 and above, then you're beginning to see what historically has marked overheated periods in the middle of the bubble. So we haven't even deviated from the long-term trend. So it's a very comfortable place to be in. But these two models only give us an average. A quantile model is the more advanced view of all this that gives us a range of outcomes and better probabilities. So here you can see this is a quantile regression on price over time that gives us something that resembles a channel, again, over the whole history of Bitcoin. And it accounts for the change in cycle structure because diminishing return is a reality. Volatility is going down. So that's the job of the quantile regression, to capture that compression of volatility. And when you do that, you can actually place Bitcoin on a specific point along the distribution from the lowest possible values to the highest possible values, and actually quantify place on the distribution. In this case, if I do a 70th quantile regression, it will exactly fall on where we are. And on top, you can also see that our risk score, which is the existing quantile, is 72. Essentially, this tells me that 72% of distribution has been traversed from the bottom to here. And there's only 28% more of the events left. Another way to look at a quantile regression is this orange line captures 72% of prior data points below it. So if you look at all the data points in Bitcoin price action, 72% of them are going to be below. So we still have 28% left, significant price action. And remember, this is a logarithmic regression, and that 28% could actually mean another 2x or 3x. So depending on how high we go, we could actually go, and this is Plancy's beautiful version of that. So it has the region's colors a little bit easier to follow. And you could see that if we go to numbers like 200,000, we will begin to enter the really dark red zone, indicating overheated numbers which historically have marked tops. So this model allows you to understand your risk as price goes up, and then you can decide what to do about it, right? I would definitely not advise waiting for a particular number, because every cycle could be a little bit different, right? One cycle is slightly above, one cycle slightly below. We are not going to be fully and 100% capturing the exact numbers. So you instead, this model, kind of very different from every other thing you've seen, it considers probabilities, right? For example, one person might say, okay, I'm going to treat anything beyond the 90th quintile as the super risky region, and then I'll have a strategy to deal with it, right? So you should think in terms of probabilities, in terms of risk, not in terms of a particular number, particular price target, and immediate actions. Some people have even decided, gradual take profit as we get more and more risky. So you could do that depending on what your strategy. You also can't go wrong with a full hodl strategy all the time if you can stomach the volatility. It's not going to be easy for people to tolerate their net worth going from 70 to going down by 80, 89%, even though once you experience it once or twice, it's nothing, right? So we have been. I personally have stated I invested for the whole time so far, but if I see money on the table, I'll take it. Then we go to our most recent model, which is the cycle model. This is the same quantile model, but it has a massive upgrade, which is it gives us a base case based on cyclical pattern, right? So even like if you look at a quantile model, there's no, this is intentionally agnostic about the timing. We never know when we get to the highs. And that's the way we want it to be, because we don't want to really pretend that we can exactly know what's going to happen. We only have 4 prior cycles. It's difficult to predict things. So it's important to keep a probabilistic mindset. But if then you look at probabilities, the highest probability and the base case is still that we follow some level of cyclical pattern. So the cycle model would give us a base case, and you have to be careful that this is just your base case. Now, what this does is it takes our quantile predictions and then overlays. If you look at these lines, these are quantile model outputs, but you can also overlay an expected price action that is based on the pattern we've extracted from prior cycles. And in this white line, it's kind of the combination of all cycles, but you can also only try to model cycle once. So if you want to see what would price do if we repeated last cycle, we would actually have a double top in 2 periods. We seem to be following more what happened in cycle 3. Yeah, so we've modeled it after cycle 3. You can see the prediction matches 100%, but then that pattern goes to the past and future, and you can see if cycle 3 is our model, then somewhere in October we are reaching the top. But we thought maybe we shouldn't rely. And interesting, if you model it after cycle 1, you get a similar result. If you model it after cycle 4, except that first top, the second top will give you the similar result. So many of these cycles actually for some reason aligning. And we thought the best way to deal with it is to look at the combination and the average of everything. So again, average doesn't mean, exact, right? So somewhere around this, right? You have to think of it as a base. If you have to think of a place where the cycle reaches the immediate top, or midterm top, then you can use this model. Very interesting. I mean, we have developed this early, right? So none of that white line prediction uses new data. So it has predicted this trajectory, and somehow it was beginning to be wrong after ETFs were approved. It started to converge, and then again, price tried to deviate from it after Trump election, and then price went below it up to a point where we were thinking, oh, these two are very much deviating, but then it's catching up. So somehow Bitcoin is still more or less following the same cyclical pattern. And what gives me strong confidence is this is not just a chart on a line on a chart. This exactly aligns with our macro analysis. So we actually were expecting second half of the year to be bringing us a ton of liquidity. I think I have it. Yeah. So 2 weeks ago, on, sorry, January 30th, is it 15 days ago, we put out our extremely bullish report saying that this is the time. This is the time where we are going to see a ton of liquidity coming into the market. And this is the clearest I've been, because you have to be a little bit sometimes careful. Consider that you can't predict anything. But this time we had so much conviction that we said, yeah, the conditions for a historic melt up are beginning. And this was when the price was at 107. The reason is, you could read the article to see the reasons, but generally we analyze macro events. There are three big waves of liquidity coming in. We've been predicting this, but the timing became clear here. And right after that, when our macro analysis talks about Bitcoin getting ready to run, it actually begins to run and follow the model. So we were here when we published it. There was some gap between cycle model and actual price, but it's beginning to close it. Let's see if it continues to do that. I expect Bitcoin to be doing very well towards the next 6 to 12 months. And if there is any crash or correction, it's going to need a macro event change. Right now, the macro structure is extremely supportive and bullish. If you want to look at these charts, you can definitely go on the platform. It's on 21stcapital.com/BI. And if you open an account, you would be also able to see our last model. What we basically do, if anyone in the audience doesn't know, what we do is we have this unique mix of on-chain and macro analysis. And this has been working well for us because sometimes not everything is visible on the on-chain data. On-chain data generally shows today or near-term future, but macro allows you to see longer outlook. So by combining the two, we've had a lot of success lately. And I can show you a quick summary of our track record that I published for our paid users so that they just know if our predictions are coming true. So I don't think there are a lot of people who track their performance, but we do. And our methodology works. Let's see what the next part of the cycle brings. But that's a gist of the way I see it, right? So valuation is beginning to get a little bit warm, nowhere near heated or overheated, and it's not just hype driven, it's supported by strong fundamentals.
Before we move on into the report, can I ask you to show me the targets? So based on this average, when and how much the top would be?
If the average of prior cycles happens, this puts us at mid-October for topping and around 200K, 230K. I still have difficulty just imagining how much price should run to get there. But hey, I had the same difficulty earlier and we are beginning to catch up. So that's it. And then after that, the point is, if we do go from 117 to 200 plus in 3-4 months, then it begins to be too much. Why do I say too much? Because what will happen is, if you follow something like a quantile model, you can see that this is the long term. The orange is, for example, the 70th quantile in the long term trend of Bitcoin. But if we suddenly go to 200 in 4 months, we will be appreciating much faster than the long term trend. What does that mean? That means price is running faster than the real adoption trend. So what else would that mean? That means there needs to be some time for us to absorb all that additional price action, right? So in my mind, there is a particular pace at which new money comes into this space. And that comes from natural adoption. You and I talking about Bitcoin, more people hearing about it. And when more people hear, more people adopt. And it kind of feeds itself. That has a particular speed that you're capturing through these average trend lines, right? Things just can't happen too fast, and they have their own pace, right? So, but when price quickly rises way above the long-term trend, this is a sign that it's happening on lower liquidity than usual, and that's very natural for Bitcoin, right? A lot of people hodl, so the tradable coins are sometimes become short, and then price runs, and it's all great. But when that happens, some of that long-term held Bitcoin comes back to the market, right? So people want to take profit. Already we've been hearing a lot of people that said, okay, that's it. I've held for 7 years and at 100K, this is the time for me to enjoy my life, right? So they're going to take some chips off the table. Similar thing will happen if we go to 150 or 200. These are like psychological levels where people will take profit for sure. And the hodled coins are not forever, right? You have to live, right? So that comes back to market. If we go up that fast, you should definitely expect some correction. And if we correct as violently as the past, then we are looking at some sub 100 numbers. For this to happen, we need macro winds to change. So, for example, we need the stimulus to be a lot less than we think. We need government spending to not grow as much. We need rate cuts to stop and maybe some inflation to appear. So all the hopes of more monetary stimulus goes away, which were, by the way, exactly what caused this bear market. This last cycle's bear market started right around the Fed started to hike rates. And the liquidity stopped, GBTC trade died, and we started rapidly correcting. And once the Fed slowly slowed down the hikes and began cutting a little bit, we are recovering, plus all the other fundamental things from ETFs and others. If we grow slowly, to your point, then I don't expect a big crash. If we grow fast, I do expect some substantial crash, which again, really should not matter for a long-term holder. If you're a long-term holder, I personally like to look at the bottom a lot more. Bottom is constantly rising. The rest is just fun, right? It's a medium-term bubble that bursts eventually. You already see some signs of hype, but it's very early. So it would be terrible to get in at the early part of a bubble, even though you see the bubble. But you have to kind of be much more aware of what's happening. Some of the things we see is like, a million zombie companies are now turning themselves into Bitcoin treasuries. It's great that they buy, but it's just proliferating so fast that they might lose the steam quick. And some of them, I haven't looked at all the hundreds that have announced, but they don't seem to be particularly strong in their economics, in their cash flows. And if Bitcoin, takes a deep dive, maybe from 200 back to 150, a few of them could actually go bankrupt and have huge trouble. That makes them potential sellers. More selling could feed on itself, get us back down to 100. That's exactly again what happened in the last cycle. Like price corrected a little bit because every bubble has to deflate. But then there was so much leverage in the system that all these other Alameda and Three Arrows Capital, all these crypto hedge funds that were over leveraged, BlockFi, everyone else, they were extremely leveraged for the bullish price action, followed by the hype masters, like I wouldn't name them, but people who were expecting 250, 500, $1 million last cycle. For whatever reason, that also got lots of institutions to plan based on that, including as well as retail. All that broke rapidly when Bitcoin prices started to correct. When that broke, leverage began to unwind and took us back down. We probably could have ended the correction at 40, but everyone going bankrupt pushed us down to 16. So a similar thing could happen, right? There should be a lot of bad news for us to correct by like 50%. But typically what happens is as price goes up, people go crazy. They feel extreme FOMO for the reasons we talked about. They lever up and price actually then goes even higher. And that causes people to say, oh, I made a huge risky bet. I made a lot of money, so I'll double down. And that's when it's over. And the music stops and price corrects a little bit. The most levered people get blown up, and that causes price to go down further. And then the medium levered people blow up and it cascades. We will obviously keep a close eye on everything. And everything I'm looking at right now shows pretty comfortable, lovely place. We've had so much range-bound price action that all that leverage has been deflated. So we are in a very comfortable place. You have to be careful if price doubles in a month or two, then you're looking at a pretty funny price action after that.
We've seen a lot of ETF players in the market. Maybe some would sell an ETF position to buy another one. And I wanted to ask you also, since we named the target, the average target for the top, what's the average target you have for the bottom for this cycle?
This puts us at a low of 90, high 80s, but gets closest to 90,000. So sub 100 is possible. But, imagine from 200 to 90 is about 50% correction, a little bit more than 50% correction compared to the last times when we've had 80%, 90%, still subdued, still showing diminishing volatility. But 50% is huge. So I think I can imagine many levered people to blow up in a potential move like this.
Like you said, some people don't have those battle scars that we have because we've gone through a bunch of cycles. So they're going to freak out for sure because 50%, it's a huge.
Oh,
I mean,
you could see, like, from, if we go to like a correction from 125 to 115 seems a disaster right now to many folks on Twitter. So imagine how would 90 look like.
yeah, 250 to 90. I think Saylor was on CNBC and he said he's expecting 180 to correct to 140, kind of, right? So, which makes sense because those are, like you said, psychological number. So 100, 150, 200, those numbers, they're going to impact people, especially if they've never seen a cycle before. They will take profits. Some traders are going to gamble on either way. So it's going to be interesting, to say the least. There is one question I wanted to ask you, because if you would paint these quantile kind of line going up, at some point, maybe in 200 years from now, it doesn't have to be in the 2 or 3 cycles, but do you see a possibility where the line is going to start converging to the downside?
Well, that would be a failure scenario because naturally Bitcoin should never stop going down on average, right? The reason for that is at some point, if it reaches the end point, which is the hyper Bitcoinization stage, where it's being used as the common currency and the de facto money, in that case, it will just be, there won't be any appreciation, I guess, because your unit of account will be Bitcoin. So it's always one Bitcoin will always be Bitcoin, but its purchasing power will increase. And the reason for that is human society grows. If you survive, actually, if you survive AI and other things, at that point, you and I wake up every day and add to the economy. We produce more goods. Money is fixed. Hopefully, money we will get to fixed money at some point. But if that's the case, then money's purchasing power just increases. So your money really doesn't appreciate in the number. It stays the same, but the purchasing power should increase. Right now, global economy is growing by 2-3% every year. So you should expect Bitcoin's value or purchasing power to kind of exactly match that. And when we get there, probably if gold also survives, Bitcoin and gold should be converging in terms of their growth, but probably will stop working. Gold probably will stop being useful in the middle, and Bitcoin will be the new gold. Right now, gold is basically reflecting global growth. And, maybe 30, 40 years from now, Bitcoin will be doing the same thing. Its rate of growth stops because it has reached the max adoption, right? But before that, it's going to benefit from several supports, several forces. One of them is just global economy growing first. Second, the adoption, which is the biggest force right now. Even if the global economy stops, Bitcoin will grow still massively. It's super young. It's at a fraction of a final state that it could get to. And then it has its own reflexivity as well. And it's better than gold in many different ways. It generates new economic value. It reduces the cost of commerce, and it creates a lot of value that also supports its price moving forward. For these reasons, it shouldn't slow down or go down. If it begins going down, something is terribly wrong, right? But its rate of growth will slow down because it's extremely natural. When you're young, your growth is fast, but as you age, your growth slows down. Now, do you get to a place where you're now too old and a new technology is replacing? Doesn't seem likely with the information I have now, because it's not like just a new tool that will be replaced with a different tool, right? This is a protocol. And as long as it works, protocols actually get more entrenched and even harder to change over time, especially if we succeed at adjusting some things over the years in Bitcoin and doing like we've been doing the upgrades we've been doing in the past. If those upgrades actually work and the consensus process works, then it will, capture the changes it needs to, and there won't be much reason to change the underlying protocol, but you will change the tools all the time. All the other, for example, stable coins are just tools for now, like intermediate tools, the wallets, the software, second layers. But the base layer is a super simple idea. Fixed money. And there is really no reason to change that unless we come up with completely different science. I don't know, maybe AI will change everything. We don't know. But at this point, Bitcoin is just there. It's a sponge that's absorbing a huge amount of liquidity, and no reason for it to slow down.
This is my way to interpret your beautiful charts and your beautiful math, but it feels like the line is going up and the curve is the volatility on top of the line. So that doesn't mean that it's going to curve on the other side because the line is pointing up. It means that the asset, in this case Bitcoin, will be less volatile, but the direction is up.
Exactly. That's how logarithms work. Like the rate of change slows, but it never stops or goes negative. Let's do this. Look at the linear scale. So this should feel a lot better.
Changes everything, exactly. If you have a long time frame, if your mindset is years instead of weeks, it doesn't matter where the bubble pops, right? Because we only care about where the base is going to be the next base for the next run. So then based on this, we could see indeed $1 million in the next cycle coming in, right?
Yes. If you look at the 99th quantiles, that would kind of like more or less the top expectations. We are getting there somewhere in the early 2030s. It depends on how the cycles perform as well, but let's see if I can pinpoint a particular. Yeah, the top of the cycle reaches $1 million at 2031. The bottom reaches $1 million, I guess 5 years later. But reality is probably somewhere in between, and it depends on topping patterns. Like if the cycle pattern completely changes, of course, you never know. But if you get similar cyclical patterns, you are getting, unfortunately, we are getting our top first, and then the 1 million region arrives. That's when we're still in the correction period, and then a second cycle will appear at 2035. That would take us to 2 million. But who knows? Again, maybe we get an earlier top. But that's why I simply look at, the average or the bottom, right? If you look at our, for example, a quantile model, you could go down to the quantiles by like 33. That's what I really like. This has historically separated the bottom of the bear market from the rest. You can see typically we go down and spend quite some time in below the red line. That's the darkest, most depressed point. So I discount that, and I kind of put my expectations. I'll look at that transition point from bear to bull. And that also reaches, I guess, 500,000 in 2030. So even if we correct massively, a huge correction in 2030 would put us at 500,000. I think I'm not unhappy with that, so pretty good. But people who promise 1 million this year, they are basically, this model would make it very clear that 1 million this year would be here. So let's do a linear. So basically they are telling you that we would be in this, if you look at my mouse, we will be in this spot. Unlikely it is compared to the past trend. Even the top of the channel is going to be 5x below 1 million. And remember, people were talking about it really seriously earlier this year. Maybe not after all this long correction, but this is helpful to me. It gives me a more realistic expectation, right? And hopefully this will kind of save a few people from overhyped prediction. It's important to know that people are incentivized to make up numbers that catch your attention, but it seems like even institutions in Bitcoin are not immune to that. So I see it as very harmful, but I have no power to stop it except for my own audience.
Well, I mean, super well said. It's always been like this, right? Like if you remember in previous cycles, people were painting a much higher number. $1 million, we're going to see it, but not in this cycle. I agree 100%. Think about the amount of money to move this thing from 2 trillion to 20 trillion. We basically have to catch up with gold, which is very unlikely for this cycle.
You can imagine it in your sleep, but in your bed. But when you actually go out and talk to real people out there, you see the extreme level of skepticism. For those people that suddenly kind of consider this as similar to gold, too soon. And it's actually good. If it happens too soon, you're going to like it for a short period of time, but not much longer because you've lost your opportunity. So it's good, I think, if it just takes its time and slowly unfolds. If it goes up too fast, I would actually get worried, because then that means, first of all, I lost the opportunity to accumulate more. Second, I'm going to be looking at a crash at some point. So both outcomes are bad. So these hype God candles that people love to see are not that fantastic.
To move one asset from $1 to $10, it requires a certain amount of money. But to move it from wherever we are today, 120, let's call it, to $1 million, it requires a huge amount of capital. And yes, even though there is interest, I don't think it's going to be enough to push us that far yet. But eventually, in our lifetime, we will see $1 million. It's just not this cycle, I agree. Do you want to talk about the report?
We publish this every Monday. It's another part of our platform you can access through the Bitcoin Intelligence Report. This thing really takes time. The latest one we published here was on my Word document. It was 20 pages of writing prepared by 3 people, and each person develops a video clip summarizing their own piece. So definitely worth checking out. The first half or first 1/3 is always open for everyone to read as well if you want to take a look. But in this report, we are tracking the market and from multiple perspectives. Again, from macro, on-chain, derivatives, any Bitcoin data that's relevant. In the past, it was sufficient to just look at derivatives or on-chain to some extent, I should say, but not anymore. I mean, we are in a fiscally dominant world where much of what's happening to Bitcoin is coming from economic actions, and then you see it on-chain, right? So you need to see both of them, right? Economic actions don't immediately impact Bitcoin. You have to follow on-chain data to understand it, but the combination makes it the most powerful, and that's what we're trying to do. I'm fortunate to be working with some of the smartest people in the space. Wizard, for example, our on-chain analyst, is the Glassnode's senior analyst, and is one of the top people in that world. Then I'm doing macro, and then Renaud is a certified financial advisor specializing in liquidity and plumbing. So we generally have all those angles covered. Now with that, I want to actually bring to your attention our latest report we published this Monday. And it's interesting that this time we did a little bit less macro. Instead, we looked at valuation, just like we did today. After all-time highs, we look at the cycle model and the fact that Bitcoin actually decided to run when the model was indicating it's a good time to run. We look at a expected price ranges. We look at several on-chain signals, who's taking profit and what's the long-term and short-term behavior. Valuation models I'll show. And then we also look at a potential risk. There is TGA refill coming on. Because of the debt ceiling, the government, the Treasury, has been just spending its own money from its bank account, the Treasury general account, but it hasn't refilled it. Once they refill it, they have to pull liquidity from the market. This is a short-term hiccup, but the overall analysis is we have a super bullish backdrop, but we have to be careful and see when this happens. And there should be a little bit of an issue. It's a mechanical process, so it will cause some volatility and will pass. We keep that in mind. But other than that, structurally speaking, we have now entered a place where, again, for sure, I recommend before reading that or accompanying that, read our 18th report where we look at the full stack stimulus that's coming. This is the thing. This is the analysis that convinced me that the range bound action is complete. And we look at all the details. I think we actually go in a lot of depth about how exactly the big beautiful bill is increasing liquidity compared to TCJA from last version of this tax bill in Trump's first administration. It's important because it should, if it doesn't add more liquidity compared to the existing law, then that's a different thing. Now, moving back in this report again, we first do a little bit of a happy dance with our track record. I make my own decisions, personal investment decisions based on my analysis. So I track it all the time. So whenever we are bearish, I'm terrified to be bearish, but we put it out in the report. When data is not constructive, we are brave enough to say it, and we get it right more than wrong. Just looking at the past 5 reports, I'm clarifying here when the report was published and what was the main message. So we were not constructive in 15th and 16th edition. Again, sadly, anytime I publish this, I'm sad. I want to be bullish, but the data is not. So in 16, for example, we said on-chain momentum is fading and Bitcoin kept falling after both of the reports. BIR 17 is titled Seller Exhaustion. We clearly saw the sellers are getting exhausted. Happened to be the bottom, right around 100K. Then we jumped, and then we got the bill, big beautiful bill, finally moving along, and all the details came out. And this is where, like I said, we get mega bullish, markets approaching a melt-up. It's rare to see research being very clear and directional, but we do take the risk when we have conviction. Setup is telling us to lean in. How else can I say it, right? And then after that, Bitcoin took another week of a slow growth and then exploded. Other than that, we review the valuation models, what they say, and when we get to overheated, again, we will definitely be very clear. You won't get any hype from us. This is a zoomed in view with better numbers of where we are actually expecting the overheat zone to begin. And we look at VPLI2, we look at cycle model, and then again, each part of the report has a full video. I am reviewing everything in video. Hopefully, some people will find these useful. We put in a lot of time and we think it's worth your attention. Take a look, and the rest of the report goes deep into on-chain data. And again, starting with a video from Wizard. Spending behavior is reviewed, liquidation heat map, particular important levels. And the 115 that we discussed really came from this idea that there was a range of there was a price range where a lot of shorts had been concentrated. Biggest concentration was above 110, maybe 11, but it went all the way up to 115. Once that was broken, all these people got liquidated and learned a lesson, I guess. Then we look at the general funding rate in the whole space. So this chart actually summarizes all assets, and it looks at trading behavior. If there are many traders putting massively bullish trades in all those coins, then you're beginning to see signs of heat. It's a little bit warm again, but not heated. So we're looking at the same question from a million angles, and we should see it when it happens in future. And then moving on, something that's very important is Renault also brings a deep view into liquidity. Again, monetary mechanics and how money moves in the world. If central banks are beginning to inject more liquidity, less liquidity, what TGA refill will do, I don't know what the issuance schedule of the Fed will do. We track all of this, and they all are helpful. It's not like we can't really eliminate any of these pieces, and they actually all inform our view. Probably that's why the overall analysis ends up pretty much aligning with how the price moves. Again, you could read the details, and we look forward for people to join our family. By the way, you can also comment and ask questions.
Fantastic. Yeah, it's such a beautiful work you guys do. So again, in the description, you'll find all the links. And of course, this is going to be a monthly catch up. So make sure to stay tuned because Sina is coming back with Plan C, hopefully next time in 4 weeks to discuss where are we going to be as always. But thank you, Sina. It's always a pleasure having you on the show. Really appreciate your time.
Thank you very much. Appreciate it. Always a pleasure to join.
Likewise. And guys, thank you so much for watching. We will see you on the next one.